Ladies and gentlemen, get ready for the panel discussion. We're getting up for that, and the topic is the performance-driven BFSI marketer, measuring what matters. And we're all set to welcome our speakers on stage. Also, before we start this panel, I have an important announcement to make. At the registration desk, you must have got a QR code scanner. You can scan it and get your pictures from today. All of it will be uploaded on the channel. Now, it's time to welcome our panelists now, starting with Mr. Ankush Bhattacharya, Marketing Lead, Jana Small Finance Bank. Round of applause as he joins us. Thank you. Next on the panel, we have Mr. Manoj Nair, Senior Vice President, Digital, Shriram Finance. Mr. Nair, can we have you on stage? Round of applause. Everyone, come on. Next on the panel, we have Ms. Sapna Desai, Chief Marketing Officer, ManipalCigna Health Insurance. She'll be here in some time. We move on to our next panelist, Ms. Shwetha Iyer, SVP and Head of Marketing, Kissht. Everyone, please put your hands together. Okay, we have a lunch break after this, so all the energy you have saved up, you can use here. Now, please give a round of applause for our moderator, Mr. Shreyas Kulkarni, Associate Editor at afaqs. Come on, everybody, please put your hands together. Mr. Kulkarni, I request you to please start the session.
Thank you so much. Good afternoon. In the panel before this, Rekha mentioned something about Gen X and Gen Z and how they behave. That Gen Z loves quick, timely actions, and the Gen X likes reassurances. Here's something. For all the young people there, lunch is just one panel away. For all the seniors out there, खाना परोसा जाएगा, प्लेट लगाए जा रहे हैं, धीरज रखिए. धीरज रखिए, sir, आएगा. I have just personalized 2 messages here. If it reaches the audience, excellent. If it does not, my performance marketing strategy of 2 seconds went to waste. मेरा पैसा खर्च हो गया. But that's the scene today. Performance, quick action, everything, messaging everyone. And today, I have with me 3 unique personalities, because one of them represents a small finance bank, the other is from a legacy NBFC, and the third is a digital-first lender. 3 unique personalities when it comes to performance strategy, but all of them are bound by one single destiny: outcomes which are measurable and sustainable. Now, Ankush, I'll start with you, because when it comes to small finance banks, my first assumption is you are banking and lending to people who are underbanked, don't have documentation. That's the idea I have. For these people, and for you as well, the trust becomes important. Before acquisition, before anything, trust has to come from both sides. How does that impact your performance strategy? Because trust is earned more when you're face-to-face.
Okay, good afternoon. So I think before I answer that question, one clarity in terms of, as a small finance bank, it is a common understanding that what we serve is the underbanked segment, because that is the whole reason as to why small finance banks in the countries were set in 2015. But that's a misconception that is there. Probably while we were set up with the whole idea to help the underbanked segments, what we classify today as the customers that we serve are the underserved customers. Now, an underserved customer can cut across multiple segments. For example, in HNI, just before this, I think Alok was just mentioning that even a lot of customers today are looking at investment avenues, younger audiences are not. But an underserved audience for us is also an HNI customer who's probably not getting the same amount of value that he kind of deserves. It could be a home loan borrower who does not have the document, is underserved, yet is being served by us. So the definition for us as a bank is that we serve the underserved. Now, whether we served underserved, whether we serve other different cohorts that we talk about, one thing that commonly stands out, obviously, is the trust factor. Now, this is more important for us as a small finance bank because the category, as I think we were talking earlier, is kind of underrepresented in the country as well. A lot of people do not understand what small finance banks are. The terms that we use are associated with them are also kind of unknown. So trust becomes equally important for us. So from a performance strategy, when we have to run campaigns, let's say a simple example being a savings account campaign that we are running, while we would love to have more number of leads and more acquisition, but while doing that, we ensure that the first kind of comms that we sent out is actually the trust signals to these customers. Now, it is important to build trust with this currency, and I think a lot of people before us just spoke about it, that trust is just not a KPI, but it's a currency that holds true for a banking system for us. And from that perspective, when we have to talk to a customer, the first thing that we have to do is to help him understand or trust us, and that comes from signals like when we talk about that today, we are an 815 plus branch network across the country. We are present across all states and UTs. We have more than 25,000 employees, by the way. We are there in the neighborhood that you're there. These are some of the signals that we would actually talk first when it comes to performance campaign, followed by, in fact, some of our strong product offerings that we do. So trust automatically becomes extremely important for us.
But when it comes to serving this underserved consumer base, let's say the digital signals they offer you are incredibly weak. You have no data upon them. What do you do then? Do you opt for, let's say, alternative data, or do you go with your gut or what your branch has to say?
I think because we have been in this business for now close to 10 years, and a couple of years back we became public, so the understanding of the segment comes very strong with us. I think because the kind of customers that we have been in the first 5 years of our existence, we had a deep understanding of the customers that we had already been serving before becoming a small finance bank. We are an erstwhile microfinance organization. So a deeper understanding of the consumers were already there. The challenge was when we were navigating to a newer segment, trying to talk to newer segments, for example, people who were banking with, let's say, ICICIs and HDFCs of the world. How do we ensure that we kind of reach out to them, talk to them? So what we figured out that while we will speak about trust, but it is equally important to change a small strategy, which is to tell them that I know that you bank with ICICIs and HDFCs. I know that they are your primary banker. But what we want is that we know that Indian consumer by its own nature is a very value conscious consumer. He or she will always seek value. If you had 100 rupees, you would want a higher interest rate, for example, on your savings. And that is where we came in and we said that I know that you have 100 rupees. You don't have to park everything with me. Probably try me out or test me out for a 5 rupees and see if I deliver that kind of value for you. But it would always be backed with that idea that a consumer has to know that, okay, this is a big enough bank for me to even park 5 rupees, and I know that the money will be safe with me. So for us, that is how it would always be.
I get this, and I have just one question before I move on. Is every consumer you've encountered, HNI, first-time formal banker, are they all value conscious today? Or is there a difference here?
Surprisingly, my answer would be yes. And this comes on the back of understanding the fact that, and it is across in the room or you ask folks around you, people, every one of us kind of loves music. It's part of our culture. But look at the subscription levels in terms of when it comes to a YouTube premium subscription or, for example, any other, an Apple Music, for example. Even the richest of the richest guys will think about spending that 200 or 500 rupees a month. I think value is deeply inbuilt because that's something how we were always brought up, and those signals will always stay with us. When it comes to banking, I think that's also significantly there. And hence, if you see, the small finance banks today, for example, we serve 12 million plus customers. And there's a reason why. Even if you are banking with any other bank, you would at least want that maybe on that 100 rupees, if I'm getting, let's say, a 2.75% or a 3% on my savings account, maybe if I try a small finance bank or maybe if I try any other bank, the rate of interest that we offer, for example, on a savings account is 7% today. For that same 100 rupees, where you're getting 3%, probably you're getting 7%. So probably that first mindset of telling you that, hey, test this out, always works best for us in that case.
Got this. My only hope would be I get an interest-free loan when I ask one. But I'll move to my right. I've been told Ms. Desai won't be joining us today. That's a pity. Now, Manoj, I have a question for you because Shriram Finance has over 3,000 branches. That's like every branch, every second city. For someone whose organization has so much value in these physical offerings, how do you ensure your performance marketing strategy complements it and does not end up cannibalizing it? Because consumers who recognize Shriram and will come to it know of the physical branch network before the performance one.
Great question. Thank you. See, before this question, I'll just touch upon trust. Right. So Shriram Finance, as you rightly pointed, I don't know how many of you know, we are one of the 50 years old company in the industry. In commercial vehicle, two-wheeler finance and all, India, we are largest financier in India. Okay, more than a bank. Okay, so what started this journey 50 years back, or the promoter when started, is from a chit company. So Shriram used to be in South India a famous chit company. And the chit business, I don't know whether you have done in the past or not. It's like an investment. You give money and you can take it, and you don't have to pay lesser interest and all. There is no interest, correct? It works on trust, and that's where trust built. Okay, and that is the trust. Since last 50 years, we have been carrying on. We have become a largest financier in India. Coming back to your question. From a performance marketing standpoint or bringing in customers, we stitch our journey. It's the phygital model. So example, I'll take an example. As I said, two-wheeler loans. Two-wheeler loans is a offline strategy because this is a dealer-oriented strategy which we have to do. But we source leads or inquiries digitally. So our journeys are stitched to offline business. So example, one of the way we do is that we generate a soft approval digitally, bringing the customers, and all the channels contribute to that, including Google, Meta, and other channels. Even affiliate business also ties up with us. And that soft approval goes as a voucher, and customer has to walk in with the voucher to a dealer or to a branch, and then we give the rest of the things, and then the underwriting and other stuff goes on. So it's phygital mode, but to bring in those acquisition and customers, we have to leverage all the channels. And just to touch upon a metric standpoint, I'm just adding on to your question itself. Those are the days when click or CTR used to be one of the metric, but nowadays CTR has to be there. But example, I'll tell you one example. When we run campaign for two-wheeler, we get personal loans, but still the click is there. But he is not the intended customer for me, correct? So that's where it is, we have to look at multiple metrics, not only clicks, but we will have to look at metrics within the funnel. We have to look at metrics downstream, which is offline metrics, when it goes to the branch or the dealer. So multiple metrics play its own role with quality output so that we get the ROI for the product. That's it.
You mentioned phygital. In which part of the funnel journey, let's say performance is incredibly effective as compared to the branch, and in which part is the branch the go-to choice for you as compared to, and you'll say, hey, let me scale back the performance campaign right now, the branch thing will work.
At the end of the day, for this product or maybe phygital products, like I said, two-wheeler loan, or any of the, even gold loan, I'm just talking about all financial products here, matters, the final this thing and decision is at the branch. So that's where the performance has to be, whether even if you come inside, if branch is not contacting you at the time or providing you the relevant guidance, it will not lead into a conversion. So the performance at the branch is the imperative here. That has to be matched to digital performance.
Can we just move and talk a bit about gold? Because gold's quite expensive now and everybody wants it. How are people behaving? Are they responding to your online campaigns, or is gold still a face-to-face purchase behavior?
So there are two angles, correct, to your question. Gold is still a face-to-face from a purchase standpoint. From a mortgage or maybe a gold loan standpoint, yes, there are people, right? So that's how Muthuts of the world or Molamprams of the world, every gully you will find a branch, correct? And gold is an asset in need of money which can be utilized. I think with rise in price of gold and all, from a finance standpoint, we don't see the similar rise, but yes, there is a rise.
Okay, fair enough. I spoke to these two gentlemen because both of them talk about an offering that's online and offline. But for Shwetha, you're a digital-first organization here. Kissht, anybody wants money at the middle of the month or towards the end of the month. Right now, it's a good time, I would say. Yes. So they have to contact her. What about you? Because in your case, trust has to be earned right away. There are too many lenders, each one offering a better interest rate or delivery. How do you design a strategy? Because earning that trust in a matter, I would say seconds, not even minutes, is incredibly hard.
Uh, Especially for a digital platform, trust becomes very, very critical because there are scams all over, right? There is news every day about somebody being scammed or the other. There are OTP scams, there is phishing. So all kinds of scams, and there is a lot of misinformation about digital lending, right? Because there is a certain kind of skepticism. While people are on digital platforms, borrowing online is extremely scary for most people, right? For it might be okay for some legacy brands, like they mentioned. There is time to build trust at various points. For us, it becomes very, very critical to build it at various stages. We do it in multiple ways. One, of course, is right on the product itself. We sort of mention that it is backed by RBI, right? There are some trust signals that we send out during onboarding, the customer onboarding on our app. Then there is a lot of communication through the journey, right? If we are using data from DigiLocker, if we are using data from Bureau, all of that is communicated right there, right? Even if the content becomes verbose, we've sort of compromised on creative communication and chosen full disclosure, right? So if there is data being fetched, if there is consent that is needed, if it is educating the customer in terms of where we are getting the data from, what we are going to be using that data for, all of these communication is very clearly mentioned on the app through the journey. There is, a certain kind of reassurance that comes through imagery. Very recently, we onboarded Sachin Tendulkar as our brand ambassador, which for us is a very big trust signal, right? Because India is starstruck, it's either Bollywood or cricket that people sort of trust. Our decision to onboard Sachin Tendulkar was predominantly that, right? Because his personality and his legacy adds a certain kind of trust where people automatically believe that if somebody like Sachin endorses a brand, then this must be a credible brand, right? So trust was the primary reason why we onboarded somebody like Sachin Tendulkar. The third part is what we do through social media, what we do through our creatives. All of that is used mainly for customer education, where we are constantly telling our customers how to protect themselves online, how to protect themselves from scams. We are one of the founding members of FACE, which is FinTech Association for Consumer Empowerment. And we were one of the founding members, where we, again, use that platform to educate customers too, and also being a part of some of these associations also helps build credibility.
How much of your budget goes to this reassurance kind of work? Because it's important. I'll tell you all, a few years ago, I had taken a personal loan from a leading private bank, and it was supposed to come through in 10, 15 minutes. That was the messaging to me, the pre-approved ones, and it took half an hour. For those extra 15 minutes, I wondered the worst of the worst, including thinking bank band ho gaya. And this is a bank with thousands of crores in revenue, and I thought bank band ho gaya, mera paisa nahi aane wala. And I needed it. That's why it's very important. If any of you has ever taken a loan online, you'll understand the pain of until it comes into your account. How much? I'm sorry? See, we both are looking forward for lunch, and we both have suffered the pain of waiting for a loan. Yes.
Yeah, so there is no sort of a separate budget allocated for trust building, right? It needs to be that common thread which is sort of woven across everything we do, right? And it's not just marketing, whether it's customer support, whether it is collections, whether it is product, whether it's technology, whether it's marketing, brand marketing, performance marketing. It is not a separate budget because it's not done in a tactical way. It is not done as one initiative which is separate from the rest of the initiatives that we run. It is something that is pervasive across everything that we do, not just marketing, but across functions.
And while you do this, what are the signals you look to differentiate between a genuine borrower and a bad borrower?
Genuine borrower, of course, because it's a digital platform, there is a lot of signals for us to vet. There is, bureau data, which we primarily use. So bureau has several markers which they use to vet a customer. For us, repeat borrowing is extremely high. Nearly 85-90% of our business comes from repeat borrowers. So his or her payment history contributes a large deal in terms of, sort of understanding the creditworthiness of a given customer. And then, of course, pretty much everything that digital marketing platforms offer in terms of attributes, in terms of consumption. So it's a combination of all of that. Plus, I mean, we have an AI-powered underwriting system, which also helps us vet all of these factors.
Got this. And, we've touched upon the subject of trust right now. But once trust is earned and a consumer enters the funnel, then it comes to measurement. What are you measuring and why are you measuring it? I have one question for all of you because all BFSI dashboards are filled with metrics. Which one do you want to throw away this year? Like, it's not a priority at all.
Okay, I will not answer this by saying that I would want to throw away something. I think there is a difference in the way we look at it. So there are vanity metrics and then there are value metrics, right? I think BFSI largely, I think, has been, and I'm not saying we all probably in some point of our lives have done that. We are too fixated in kind of understanding and measuring the vanity metrics too much and not focusing on the value metrics. A case in point being simple. For example, when we drive acquisition campaigns for us, right? We are very happy to see the CTRs, the reach, the impression numbers, the CPLs of the world, right? But often when we see that even after the final conversion has happened, let's say when we have looked at our overall conversion number, the CAC numbers and all that we have looked at, that is where the buck stops and a marketeer is absolutely gung-ho about what he has achieved, right? But the fact is I would then take it a step further and say that it's not about measuring just the vanity metrics, but the value metrics, the definition of value metrics are a bit different for us. For example, if I have acquired a customer, let's say I've opened an account, if that was my ultimate objective through the campaign to open an account, if I source the account, for us, the measurement of that, whether that was value to the bank or not, or whether it had a business impact or not, is something which is crucial. And that comes from the fact after probably the customer has been acquired. So for us, we would look at, let's say, measurement metrics like the cost per funded account. Now, I would have opened an account, I would have spent 1,000 rupees to acquire a customer. If he ends up giving me, let's say, keeps a balance of 1,000 rupees in the account, it is of no value to us as a bank, for example, when we're trying to drive value. I would look at, for example, the cost per funded account. I would look at the next 3 months in terms of the balance building that this particular sourced account has done. So for us, the focus on metrics is far more on value than on vanity. Vanity's metrics are good for the dashboard, makes you look absolutely beautiful. But I think if it does not have real business impact, I don't think it is of much value to us.
Okay, fair enough. Manoj?
I think I side by that, value is the important one. Just to add upon to value, as I've talked about it previously also, ROA, which I talked about. But apart from this, primary thing which we also look as an MBFC is PPC, which is product per customer, correct? So like he was rightly pointing it out, I brought the customer inside for a particular product. In his case, it was a savings account. For us, our case, it may be an app download or anything, but how many products the customer is taking after that. So that matters because then the cost of acquisition or the CAC is efficiently utilized. So answer to your question directly, there is no metric that we cannot remove. It is All the metrics are important. Nowadays, we have more metrics, correct? Now, the recent ones related to social scoring is getting added to metrics. So, lot of metrics are there. So, we will have to look at it in a holistic way, not that a single metric has to be excluded or removed, or it has to be, the weightage has to be there. At the end of the day, the CAC or ROI has to be met.
I sort of echo what the both gentlemen have said, but specifically for a digital platform, we have started putting a lot of emphasis on mid-funnel metrics. For us, like he mentioned, we are not governed by clicks and impressions. I think it's a very archaic measurement, and media partners need to stop offering those campaigns, CPM, CTR, CPI, none of these sort of capture intent and quality, right? So we have started looking at mid-funnel metrics, and in fact, deep mid-funnel, where we are not even looking at onboarding completion, right? It is not even install, it is not even registration. We sort of go into cost per KYC complete, because then the intent is very strong. If a customer is completing a KYC, which is again scary for first-time borrowers especially, if the customer is completing KYC, then that is a very critical metric. Second metric which is important for us is repayment history, right? If somebody is coming in, right, somebody completes it, borrows it once, then that's again not a very valuable metric for us. It is whether the customer pays on time and the lifetime value. So anything that is top funnel should be measured. I don't think we can do away with it, because top funnel is also an indicator of the brand equity. So top funnel is good to have, but what is must have is deep mid funnel and bottom funnel metrics.
Got this. I hope the agencies are listening to this. And before we end this, see, no conversation around performance in 2025 can end without a mention of artificial intelligence. There's so many things to ask about it, but I have 3 simple questions for each of you, and I would like, and just like AI, just like ChatGPT, I would like you to wrap them up in as little time as possible, so that we can show the humans are as good as the machines, or as people are telling us. Manoj, and this is a funny question which I thought of. Say you use an AI tool to not just get a lead, but to convert it into a proper purchase. The same thing is done by the branch on the same customer. Who gets the credit? The performance campaign people or the branch people? Kisko credit milega in the eyes of the head?
No, so yeah, it's a good question. It's a question on attribution which you're talking about. That's where all the dispute happens in an organization, correct? And with the agencies also. But it's weightage which we have to give, because X cost is associated to for a particular product to be acquired. So we will have to give weightages. So that's what we look at, because branch is equally important, because at the end of the day, the end funnel is managed by branch. So that is important piece. So it's weightages which has to be associated. Coming back to the AI question, I'll just answer a few points. AI now is a bubble, but all of us should not be fearing of AI. So you should imagine once upon a time we used to hear about e-commerce, correct? Now e-commerce has become a norm. Everybody does that. Similar way, AI will become a norm. So today as we speak, in our world also digitally, most of our creatives, designs, videos, 50 to 60% of them have moved to AI tools. Correct? But it has its own implications. So I'll tell you one incident. We use a tool called Midjourney, and we got some good creatives and all. But suddenly we realized in one of the creatives, the fingers are missing. It looks like one finger is missing and all. So you have to be very cautious when you use AI. The human touch has to be there. The audit has to be there. That is important. Thank you.
You know, you could have just said, if you need a finger replacement surgery, come to us, we'll finance you. Ankush, what about you? Is AI a bubble? Or how much do you use it in your bank?
Um, my answer to that is a bit different. I think we have been early adopters of AI. I think what's going to happen is it's going to be the foundation of how things progress from here. Um, a lot of things that will be built on the banking side will be based on that. And from a marketing standpoint, if I have to talk about it, I think today it has become an enabler in our lives in terms of from a very basic mundane activities, I think have been now moved across from example, content creation to a lot of creatives has moved across. And I'm talking about not content or creatives meant only for major campaigns, but I'm saying marketing teams across verticals, across industries have to face a lot of load and pressure in terms of doing a lot of mundane tasks. I think one big advantage is that a lot of that is moving towards these platforms, which are helping teams to kind of be far leaner and help drive far and become more efficient. I think this is a point that MVS was making in the beginning of the conversation in the early part of the day. So I think efficiency levels are going up, adoption levels are high. When it comes to creatives and all, it's certainly an advantage. When it comes to video at the moment, I think it's still at a nascent stage. We still don't have the quality that we intend to see. I think from that standpoint, content is a big win, I think. Flip side, obviously, is the disadvantage. It starts becoming very similar. But I think if used very smartly, I think AI could help on the content part also. So I think there are definite wins with it. How do you use it is something that depends across brands. But my parting comment would be it's a definite enabler and helps you function and be more efficient from a marketing standpoint.
Got this. And my last question, Shwetha. AI is an enabler, I've heard. But how do you ensure it does not risk compromising your portfolio by scale can also expose you to a lot of bad customers? You mentioned the answers before, but in terms of AI, how do you ensure it doesn't happen?
So our underwriting is entirely AI driven, right? And we've had very good results in sort of predictive modeling that we use extensively, which talks about whether or not a customer is going to pay back on time. We use AI to sort of, calculate risk, delinquency. So some of those aspects, AI is extremely critical, and it's sort of helps us do that very quickly, helps us do that at scale. So definitely in terms of underwriting, it is irreplaceable. Second, when it comes to marketing, again, it gives you scale, but it can't be a blind spot, right? Very recently, there was this Pakistani newspaper, where a journalist had pasted the entire article, including the summary. So the newspaper article said, if you want, I can give you 2-3 lines on this. So that's, that it's a copy paste job. So we run the risk of doing that specifically when it comes to marketing content. AI can be a tool that helps you give variance of something that you feed in, right? But that human input in terms of feeding it with factual information, giving the correct context to AI. So we use AI for creatives, we use AI for our content, but again, there is a layer of QC, there is a layer of what we put in, the kind of prompts that we do. So it's all about prompt engineering, where very cleverly you need to be able to leverage AI, across functions. So whether it's our IVR script, our customer support script, underwriting, marketing, prompt engineering is something that we focus on. There have been enablement sessions in-house in terms of how this is, you need to be able to leverage AI, but you cannot have a very high dependency on it specifically for content, because on one hand, you're talking about personalization, and you can't then be using AI to create very cold, impersonal messages. So it is an amalgamation of these two, where there is a human intervention, but you use AI to give you that scale and variation to what you're doing.
I get this. In a nutshell, human oversight is very important. And does my very human audience have any questions for my dear panelists? Or are you all still stuck in your phones? I can see 3 or 4 slouching shoulders. I know you're looking into your WhatsApps right now. Any questions for anyone? Nope. That's yes. Huh? You have a question, sir?
to Shwetha ji. Kissht. So before the lockdown, there were some parameters which I had taken the loan from your side and I was totally disappointed. जो अभी सर ने बोला था 15 minutes, and it was 3 days. I was going to take the product at cash from the vendor, and there you are listed. So there was some criterias, like now you are using the AI, depending on completely. After in that parameters, अगर ऐसा कुछ होता है, तो you should be having some points, checkpoints or some things कि उसको rectify easily किया जाए.
So that's put in place, right? I think pre-COVID, the situation for all businesses was very different, right? But a lot changed in 2020, 2021, including our own engines, right? A lot more efficient. And that's the nature, I think, of every business where, there is iteration and there is learning after, the insights that come from the market. I think we've kept a year to the ground and improve the engines, improve the systems, and we continue to evolve.
On that my experience, तो नाम देखते मुझे past याद आता है. And I was giving the cash. The vendor told me, why you are giving the same amount cash where you are getting the free EMI.
I'm sorry to interrupt you, sir, but if it's not regarding to the panel and due to personal experience, we have lunch after this. You can, of course, meet us one-to-one and speak about it. But if there's no other questions regarding the panel or anything around performance, we can wrap it up. Yes, thank you.